Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms since 2003 for individual traders and professional institutions, such as our 21 SPY and ES mean reversion systems, our amazing KISS trend following systems. And anyway, markets had a hell of a rally the last 2 weeks. Let's go ahead and look at things and see if anything stands out. So this is our back-end recorder for our standard website, which I'm going to go ahead and start right now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, November 15th newsletter. Newsletter is recorded a bit later tonight than normal. Kids had a bunch of activities after the market that I had to take care of, so hope you understand. Anyway, again, Wednesday, November 15th. Newsletter is divided into 5 major sections, same general theme as we always keep. We first look at the general market indexes, make some comments. I'm actually going to talk about our KISS systems to begin with. Then we'll move on to the general market analysis. We'll look at bonds. We'll look at a few indicators, sectors, commodities, and recent trade ideas. I only added one new idea. Markets had a hell of a rally here, guys, and it doesn't mean it won't go higher, but definitely the risk reward on the long side here is not great, unless we get more consolidation. By the way, today was essentially a consolidation day after yesterday's huge ramp. Yesterday, the S&P rallied over 90 points on that CPI data. And by the way, some of the numbers on that CPI data, quite honestly, guys, I think they're cooking the books a little bit. I mean, they cited things like health insurance fell 35%. Let me ask you, did your health insurance premiums fall? Mine sure didn't. They go up every year. They've never went down. So, whatever, it is what it is, but market had a hell of a rally yesterday. And the previous day before that, it was consolidation day. Quite honestly, I was surprised at how strong that rally was, but hey, it is what it is. And the nice thing is our KISS trend following systems on the indexes, they all went long a couple weeks ago, so they've caught a lot of this rally. And of course, a lot of the individual stocks, especially the FANG type stocks, KISS systems have been long. Anyway, let's go ahead and get started here. So let me talk about some of these KISS systems. So as you know, on the website, we have the STS tables where we have over 600 instruments followed by the KISS systems. You're able to set favorites and you get automatic emails each day if there's a change, such as a new stop, smart trailing stop, or a new entry. Anyway, what I'm doing is I'm making these high performance versions of these KISS systems that have 2 and 3 times the performance over the standard. So here's QLD. I'm making a little basket of these. So QLD, that's the 2-time leveraged ETF for the Qs. So you can see again how it went long there, basically November 1st. Stops have been raised a bunch, still long, very nice profit. Next, image number 3. So this table here, this is from TradeStation. This is where I have the systems coded. These are the custom KISS systems, the high performance ones. So I got a basket of these, as you can see. So XLE, oil services, URA, they're all flat at the moment. But these are the ones that have open trades, all up very nicely, except a couple of these. GDXJ systems went long a couple days ago. They're only down slightly, 40, 50 bucks. And PDBC, that's the commodity ETF, that also went long. It's down about 100 bucks. The other ones are up very nicely, really nice gains here. Each trade here is based on $10,000, in case you wondered. I do that just for, simple round number of 10. You would obviously trade whatever amount fits your risk profile, account size, whatever. But you can see what's open on some of these custom systems. Again, I'm hoping to release these over the next few weeks. That'll be a premium section inside the KISS system area. So pretty excited about this. I love the statistics. Taking a look at some of the statistics to these custom KISS systems. So here is Just a couple of them. So here's the Qs, 78 minute. So 78-minute bar, there's 5 bars in a day. Why am I using a small time frame? For whatever, these smaller time frames are able to capture a little better gains, and you're still not getting a ton of trades. So here's the Triple Q's 78-minute KISS system going back to 2003. If you look here, there's only about 6 trades a year. That's not that much. But, take a look at the performance versus just the Q's buy and hold. It makes quite a bit more money. It's a similar gain this year as the Q's, but you can see last year it made money versus the Q's losing 33%. Um, you know, Most of the years it beats, and especially in bear markets. But the real benefit too is the lack of drawdown. The drawdown is only 3.3% on average versus about 28% on average for the Qs, with a max drawdown of 11%. But the max drawdown on the Qs was 80%. That occurred, of course, in 2008. And in 2020, you had a 54% drawdown. In 2022, you had almost a 64% drawdown. The KISS system only had about a 4.9% drawdown. So quite a bit different. You can see some of these stats. Here's oil services, just something different. And just take a look at the difference of this versus just simple buy and hold. Just not even a contest. Average annual gain 25% versus 7. You know, this year it's up about 20% versus only, I think this, I haven't updated this for a little bit. I think this is only up 5% now. And, but again, look at 2020, made 83.5% versus buy and hold lost 41%. Look at your drawdowns compared and your drawdowns on buy and hold. Not even close. And here's commodities. You can see big gains every year. This year up about 30% versus essentially flat for buy and hold. Last year made 39.8% versus 19%. 45% in 2021. Buy and hold made 41.7, so fairly comparable there. 2020 up 33% versus losing 7.8%. Let's take a look at the drawdowns. Average drawdown only 2%, 2.2%. Max drawdown 3.8%. Look at your drawdowns on the buy and hold. So I really like the KISS systems from that aspect. The low drawdowns and the fact that you have a smart trailing stop to help protect you against black swans and other things that occur. Anyway, let's go and move on back to the market analysis. So here's the index sector table, what transpired today and this week. Again, today mostly consolidation day for the indexes. Small gains, the Dow made the most. Big gains for the week, up anywhere from 2 to 5.7% for the Russell. Remember, the Russell has been the weakest, and I said on a market rally, it would rally the most because it's the most oversold. And I said if I needed to go along the indexes now, I'd be going along the Russell instead of the S&P or the Qs, and you can see why. Look at those gains. As far as the market sectors today, most were up, mostly small gains though. For the week, everything's almost up. Everything's up except drugs. US dollar up 0.38% today, but still down 1.34% for the week. Bitcoin was up today, by the way. A couple stocks look interesting in there. Mara, I put that in the trade ideas. We'll talk about that when we get there. Commodities, mixed bag. The index was down 0.66%. It's up about 0.6% for the week. Crude oil down 2% today. Natural gas was up 2.7, up 5.2% for the week. Copper up about 1%, up 3.7% for the week. The ags were weak today. Corn, wheat, coffee. Precious metals, gold was down a quarter, but silver was up 1.3%. Now the miners were down 0.5%. Again, it's possible we got a higher low in place here, but this sector really needs to, get going and hold that higher low that we have. And as far as the bonds today, 10-year, 30-year bounce back a little bit. 20-year bonds fell. Next. Item number 6 shows the economic news calendar. Like I said, we had the soft CPI and PPI numbers. CPI really launched the rally in the market on Tuesday. Tomorrow, Thursday, we have initial jobless claims, natural gas inventories. And let's go and jump to these index charts, guys. So the first chart below, item number 7, is the daily snapshot of the 5 major indexes. Again, a couple weeks ago, we were below the lower Bollinger Bands. We stated we were likely due for a rally. We just needed a catalyst, and boy, have we had a rally since. You know, that after that low, the market was up 5 days that week, had 4 gaps, and this week it's up nicely. We have another gap. We've had 5 gaps now. We have 5 gaps, open gaps on the market, which is crazy. We're now at the upper Bollinger Bands, some little doji candlesticks here. Could be an area to pause if if the market wants to. Next. Chart number 8, here's moving on to the S&P 500 charts. Here's the daily S&P. Again, we put in that little 5th wave low in late October. Again, it's not a traditional 5 waves, guys, because you have your wave 4 overlapping your low of wave 1. It's kind of like a leading diagonal type thing. So perfect bounce off the 61.8 fib as well. We've rallied now into a little supply zone here. Notice today's black candle doji. If we take out the low of the doji, that could set up a mean reversion trade back to one of these short-term moving averages. Next. Chart number 9, here's another daily chart of the S&P zoomed out a bit. Next. Chart number 10, here's the equal weighted S&P. Now this is lagging a lot still, okay? This had sort of a slanted inverse head and shoulder pattern. Nice breakout the last couple days. But you can see how far this is from the highs. Again, remember guys, it's those weighted stocks like Apple and Microsoft that have skewed the indexes. So anyway, a little bit of resistance right in here from the August lows. Next. Moving to the KISS systems, here's chart number 11 is the S&P KISS system. This is the daily system. And again, this went long a couple weeks ago, basically a couple candles off the low. Pretty good entry. It put its stop at the lows. It moved it up to 41.66. Now it's moved its stop up to. All right, guys, I'm going to record this slide again. This chart, image number 11, this is the KISS system for the S&P. Again, it went long a couple weeks ago, just off the lows. Pretty good entry there. The previous one was a small loser. The previous one before that was a nice winner. Anyway, nice entry there, and now it's raised its stop, smart trailing stop, 4 times. Moves up to 43.68 today. So nicely protecting those gains, which we like. This is an example of the high performance KISS system for the daily. Next, looking at the other time frames here, 4 time frames. Here's the daily. Again, just a heck of a ramp from that late October low. You could see we had a mark 9 there, wide moving average ribbon, and it's been up and away. We blew through that resistance cycle there. By the way, this is a support cycle in cyan dots. These are resistance cycles. We blew through that. Little doji today, so that could set up a little area for a reversal, perhaps, if we take out the low of that. Otherwise, not a lot to say here, guys. We have the ATR support on all these time frames to watch. Next. Chart number 13, here's the half-day chart. Again, rallied up. We're into this supply zone, like I said. To me, that's a logical area to pull back, perhaps. Next. Chart number 14, here's a 60-minute view just showing that move up, break out of that pattern. There is some MACD divergence here at the moment to be aware of. Chart number 15, here's another 60-minute chart. Again, look at all these gaps that have formed, guys. We have 5 gaps over the last 2 weeks. That's crazy, okay? And anyway, these gaps on a pullback, at least this first one could be a magnet, maybe in a deeper pullback, one of these others. This area, which was previous resistance, supply zone, is now a big support. But there's a gap from yesterday that could now be a magnet if we pull back from here. We do have some RSI divergence there at the highs. Next, Trevor 16, here's a 15-minute view. You can see you have a little kind of an umbrella top look, little head and shoulder look. So we'll see if that plays out or not. And finally, Trevor 17, here's a 5-minute view. You can see we have a coil forming. This could do either way. It could pop up one more time. If it pops up one more time, that might be it. Then we get our correction, or this just breaks down now. We'll likely know tomorrow. Next, Trevor 18, here's the triple Qs. Again, they never got to their 200-day moving average. The epitome of strength, let's call it, rallied up. And, now today, basically, it made a new all-time high at the highs here, this black candle. Next, Trevor 19, here's the KISS system. Again, KISS system's done very well on the Qs this year. Really nice long for most of the year. Then there was a whipsaw trade there, and a system went long again, a couple weeks ago. Right now, it's been on a raise its stop 4 times. Current stop is 363.70. Next, Trevor 20, here's the 4 time frames. Again, essentially the same look as the S&P. ATR is your support in all these time frames now. Next, Trevor 21, here's a half-day chart. Again, we made a new all-time high today, 387.75 versus 387.42. We do have some divergence up here. RSI is overbought. Next, Trevor 22, here's IWM. Remember IWM, I pointed out this inverse head and shoulder pattern. I said if I wanted to go along one of the indexes, it would be the Russell. And it had a massive rally yesterday. Was up again today, logically pulling back some off that 200-day moving average. Trevor 23, here's the 60-minute view. You can see it held that 61.8 fib. There was a gap there, didn't fill the gap. Heck of a rally there. Hope some caught it. All right, guys, let's move on. Trevor 24, here's the VIX. The VIX continues to go down, but guys, again, don't get complacent. There is some RSI divergence here now. A lot of times these RSI divergences could set up better bottoms. You had one back here. You also had one right here that I don't have marked. You also have a doji here. Next, Trevor 25, here's the 60-minute chart. We had a little coil here yesterday, broke down. There is still a MACD divergence here, so this is still something I'm monitoring. Trevor 26, here's the NIMO. Not a lot to say on here, quite honestly. Let's move on. Trevor 27, here's the NAMO. Remember, we had that strong positive divergence on the McClellan oscillators at the lows, and those obviously played out. Trevor 28, here's high yield corporate bonds. As you know, they kind of led up. Market tends to follow high yield corporate, and they were stronger than the market. And they made a new high. Anyway, they're pulling back now today, retesting that breakpoint. Trevor 29, here's the 2-hour view. Steve illustrated this yesterday. You can see now a clear 5 waves. Whenever I have 5 waves in one direction, I always pay attention. So that was an area to take profits, because now after 5 waves, you'd expect some sort of ABC consolidation. Trevor 30, here's the 10-year treasury yield bouncing today. Again, it's had a nice sell-off from that highs when it was at 5%. That parabolic move. That helped fuel this market rally, the pullback in rates. It's trying to bounce here a little bit. You see there's some RSI divergence. So it wouldn't surprise me to have a rally here, but I don't think it's going to go back to the highs at this time. I think rates have put in a decent top for a while, but bouncing back today. Trevor 31, here's TLT 20-year bonds, opposite, so they pulled back today. Nice rally from that lows a couple weeks ago. Next, Trevor 32, this shows you some of the major sectors. Again, I'm not going to go over all the sectors here tonight. We'll just look at a few of them that we've been discussing. Trevor 33, here's transports. On the weekend and on Monday, I showed this tight coil, and this thing played out beautifully the last couple days. Look at that move. Trevor 34, jets. That's a subcomponent of airlines. As you know, I was tracking this all October. We finally got a long trigger here inside that channel, breaking that little base, just over 15. Had a heck of a rally since then. Chart 35, here's the daily. Again, you can see that was that steep downtrend channel. The trigger was buying inside the channel there over that line. You rallied up, made a higher low off the 20-day moving average. Nicely up. Hope some caught it. Next, chart 36, UNP. This is in the transports. We've been showing a few of these. You can see this rally nicely out of that flag pattern. Chart 37, FedEx and other transports rallying out of that pattern. Chart 38, industrials. Nice move up this week. Chart 39, Boeing, part of that area was one of our ideas we've been showing. And chart 40, GE, another one, basically testing its highs. Next, we already covered jets. Chart 42, biotech. I talked about this on Monday and last week. You had a bullish break in symmetry in that October, early November rally. So I said to look for a higher low. We had a doji candlesticks last week and on Monday. I said that was a good area to trigger long, and it popped nicely. Chart 43, LABU, that's the triple long ETF for biotech. That was one of the ideas I put out as a leverage play on Monday. Played out nicely. Hope you took some profits today at the 50-day moving average. Chart 44, semiconductors, another area to monitor. We have a black candle doji outside the Bollinger Band, so keep an eye on that. Taking out the low of that candle could be a trigger for a mean reversion short, or if you have a solid down candle like this, it could set up a bearish evening star pattern. Chart 45, NVIDIA. Steve put this out as a short yesterday off that doji. The trigger was taking out the low of the doji. And again, you got a nice quick trade out of it to the 5 EMA anyway. Or the, yeah. Next, chart 46, AMD, another semiconductor to monitor. Pulling back as well from that doji Steve mentioned last night. That could be a quick short trigger from there. Next, chart 47, emerging markets. They've rallied nicely. I think they've put in a decent low. They broke symmetry back here. Remember I said to look for a higher low, which you got your opportunity early this week. Nice move up since. Chart 48, BABA. Chinese market's been moving up as well. This is a weekly chart. Has a big old little bottoming coil forming. One to watch. Next. Moving on to commodities. Chart 49, DBC. Down today. Here I'm illustrating what could be some sort of diamond pattern that's fleshing out, or coil, whatever. You can see the 200-day moving average has been important. Bounced off it the last few times. We'll see which way this breaks. Chart 50, here's crude oil. So far that slanted head and shoulder pattern I've showed a few weeks back has been playing out. That move down, we were favoring that as some sort of wave 3 of C. I talked about that bounce being maybe a wave 4 bounce the other day, and that looks like it's been playing out. Now we're going down in wave 5 of C. Chart 51, natural gas. This is the weekly chart, up about 5.2% for the week. It's been a steady, choppy uptrend since that August lows this year, or April lows, I mean. Next, chart 52, copper, up again today. Again, beautiful how it held this long-term support. It's tested that many times. That was a good area to go long. And looks good. Next, chart 53, DBA. Holding the uptrend line here. It's been an uptrend. Next, chart 54, Bitcoin had another pop. So really not a lot to say. It's been up, and away. Chart 55, MSTR. This is a long idea I put out a couple weeks ago for the Bitcoins. Had a heck of a move up. If you were using some of these higher low stops, you would have stopped out and bounced back. Again, it is what it is, guys. Still provides you an excellent trade if you stayed till there, or if you took your trade off up in here. Next, Jabber 56, Mara. I said this one looked good. You can see the nice coil forming here. Great volume patterns. I actually bought a little bit of this in after hours today. We'll see if I get lucky tomorrow or not. Jabber 57, Riot, another one. So there's a couple to monitor in the Bitcoin space. Moving on. Jabber 58, US dollar, had a big sell off yesterday. That helped the market rally big. Today bouncing back a little bit. Jabber 58, 9, gold rallied yesterday off the 50-day moving average. A little pause today. You have a bullish moving average ribbon pinch. I think gold put in a decent ABC low there in early October. So right now we're just trying to flesh out this higher low. Jabber 60, silver. Again, nice rally inside the pattern. You could see you could add a nice trigger off that doji. Again, you essentially have a big weekly coil forming in silver. Jabber 61, GDX. Again, so far we have a potential higher low in place here. You could see what looks like sort of an inverse head and shoulder. Left shoulder here, right shoulder, head, neckline area up in here. Um, if you're long this stuff, the index here, you could just put a stop essentially around that 27 area. Next, Jabber 62, GDX on the 2-hour view. So in the short term, the stocks have been leading up a little bit. Remember, we did fill this gap from early October. We get a little bit below that. That was a magnet, and then we've bounced. Again, this area still has work to do, guys. But if you're long, like I said, easy stop would be that last higher low at 27. I think that's also where the KISS system has its stop. Its custom KISS system. Jabber 63, WPM, Wheaton, Precious Metals. Steve put out a couple individual names in this space last night. They didn't trigger, but here's a couple to monitor. Nice little resistance trend line there. And AEM, another one to monitor. Similar look, quite honestly, to the GDX index. All right, let's follow up with trade ideas. We've had some nice ones. So Jabber 65, AI, ChatGTP, whatever. I mentioned this again as a long idea on Monday's newsletter. I said it looked like it was flagging off the moving averages, and it's had a nice pop. Off the highs today, but it gave you a nice trade. Jabber 66, Massey. It's been on the list for a while. It's been on the list since last week inside the pattern there. I like the volume patterns. And it's been kind of steady eddy. The pattern would measure up to about 100. Whether it gets there or not, we'll see. My style is, if I bought inside the pattern, which I did, I'll decide to peel half of it off, just to lock in something, and then I'll hold the rest for the potential target. Next, Jabber 67, fix, long idea of mine on Monday. But again, the market gapped. Now, if you bought the gap on Tuesday, right in the morning, you still made money. It's hard psychologically to chase those gaps, though. Jabber 68, Janex was another long idea from Monday's newsletter. Again, beautiful pattern. I love these type with a big volume, nice little base. And again, it gapped up too on Tuesday and followed through today. Hard to get in these things when you have a massive gap and on Tuesday. Jabber 69, VSCO, another one from Monday. It triggered on Tuesday, up a little bit today. You got a higher low in place, would be area for a swing stop. Jabber 670, BLDR, another long idea from Monday. It gapped up. If you bought the gap on Tuesday, you made money. Today, it gave a lot of it back, though. Next, Jabber 71, JD, one from Steve last night. Again, gapped up today. Jabber 72, LPG, another one from Steve last night. Broke over the trend line, pulling back a little bit. Jabber 73, Airbnb, has been on the long list. Nice pop the last couple days. Jabber 74, Microsoft. Again, Microsoft, by the way, represents this, and Apple represent the biggest weighting components of the S&P and the NASDAQ, triple Qs. Anyway, a couple black candle dojis here. You do have a little RSI divergence. So Taking out the low of this doji could set up a mean reversion trigger. Short, your stop would simply be at the highs. Chart 75, Apple, same deal. You have a doji here, a spinning top doji. You could have a mean reversion short below the low of the doji there, stop at the highs, maybe a target of the 90 MA. Just a mean reversion pullback looking for. Chart 76, here's a 30-minute chart. So the evidence that doji could give you a trigger is you have MACD divergence on the 60 and 30-minute time frames. Pro tip, if I see a doji on a daily and I think it might provide a short or a long, I need to confirm it with a divergence on a 30 or 60-minute chart. If I don't see a MACD divergence, then more likely than not that trade setup will not work out. The final chart here, chart 77, WKSP. This was the new long I added. I said I only added one. Nice volume today. See the big volume breaking out of a little pattern. So this is one to watch for potentially momentum follow through. All right, guys, it's already late, so that does it. We'll see what happens on Thursday. And thanks for all your support. Take care.